Good afternoon, everyone. This is NYU Grads Daily Podcast. Welcome back. Hope you are having a great start of the week. This is going to be covering the Monday session, and let's just jump right in. I would say the summary of the day was in the early part of the day, the volume was very light. But as we approach the noon lunchtime break, a lot of things started to break out today. So looking at the closing numbers, the Dow closed up 87 points, 0.25%. The NASDAQ closed up the strongest, up 156 points, up 1.14%. And I'll go into how that happened or which stocks impacted that the most, as well as the S&P 500 was up almost 30 points, up 0.67%. The breadth numbers were pretty decent today. I think the only thing really missing until the end of the day was volume. But for new highs, we had 153. And for new lows, we had 286. So, it was like when you see breadth like this, it's tricky, right? Because all of the indices closed green for the day, but you had more new lows than new highs for the day. So there's a lot of cross currents right now. And I think we made some progress to the upside today, but everyone is kind of waiting for a few key data points. Number one, I think, tomorrow, when you're listening to this on Tuesday, Apple's event is on Tuesday afternoon. And then you have the CPI report on Wednesday morning. And then next week, you have the Fed rate decision. So those three are the stools in which this recent year to date of bullish market is waiting on bated breath here. When you take a look at the advanced declining, it was on the bulls' favor, 56% advancing versus 39% declining today. I would say in the morning, it was a little shaky because Apple and NVIDIA sold off pretty hard, but they fought back in the afternoon. What really stuck out to me today was consumer cyclical. If you don't know what consumer cyclical stocks are, they're basically consumer stocks that necessarily are not necessities, like, Airbnb, right? In travel is consumer related. It's not something that's essential like soup or foods. So that's what consumer cyclical type of basket stocks are. There were a ton of stuff that were very strong today. I noticed, I mentioned that NASDAQ led and Tesla added a majority of that. Tesla is up 10% today. There's a lot of reasons why. It doesn't really matter as much of the reason, but it is up 10%. Elon Musk, we're all living in his simulation, I guess. It's his world. But there's a lot of talk right now about Tesla developing their own AI engine, excuse the pun, or AI software / platform. And then there's also a lot of talk about a potential release of their next consumer automotive product, which is a $25,000 affordable version of their Tesla. And it's going to be built in conjunction, in parallel with their autonomous robo-taxis. And I think there's a lot of extrapolations on what that would mean for the company and how that could potentially lay the foundation and the runway for Tesla to become one day the most valuable company in the world. We're all going to be going, traveling on robo-taxis or driving a Tesla that's all electric. I'm a little skeptical about that future just because I don't know if I would trust an autonomous robot basically to drive me around with no steering wheel. The robo taxis are not going to have steering wheels, and they're not going to have gas or brake pedals. Fully autonomous, like the Jetsons. I just don't see it happening. And unless you basically make it illegal for everyone to drive, right? If you say, hey, starting at this date, 2035, citizens or humans can no longer drive on American roads, and every car has to be autonomous. I think that's the only way this could work, because what happens if a human driver crashes into an autonomous car, vice versa, and people get hurt or people die? Who do you sue? Who is liable? Is it the car company, the manufacturer like Tesla? Is it the driver? Oh, I'm sorry. Is it the passenger that's not driving? Is it the highway? Is it the state, the city, municipality? Like, who is on the hook? And then secondly, outside of the insurance, if a human crashes into a robot or a robot crashes into a human, like, whose fault is that? Vehicle operation wise, right? Like, did the AI make a mistake, or did the human make a mistake, right? Like, so for those reasons, I'm very skeptical, but we'll see, right? Elon has gotten his way so far. I've driven a lot of Tesla models, the 3, the Y, the S. They're okay. To me, they're kind of like refrigerators on wheels, like they're appliance type kind of vehicles. There's no passion, there's no fun. It's fast, there's torque, but I don't know. We'll see what happens. I can't argue with what he's done with the company and the stock price. What else was strong today? Carvana, up 8.2%. Affirm, the buy now, pay later, up 4.9%. LYFT, up 4.7%. MongoDB, up 4.5%. Uber, up 3.5%. Amazon, up 3.5%. Meta, up 3.25%. So all of this is going to lead into the NASDAQ index to lead all indices, right? A lot of the high growth was up today. What was weak? You had CAVA, which was the Greek food restaurant, quick serve restaurant. They were down 4.13%. KRUS, the sushi company, is down 3.44%. I've mentioned that company, KRUS Sushi, a few times on the podcast. You have Etsy, which looks horrible. Their chart looks horrendous. Etsy is down 3.4% today. MGM is down 2.5%. I think there was news that their systems were hacked. We still don't know how much of a hack it was and what type of information they got. And then VinFast Autos, that SPAC I've been warning everyone about, is down again 3.3%. I mean, it'll bounce eventually from here somewhere, but from where, I don't know. Just stay away from this if you have been fortunate enough not to own VinFast Auto. But it's just, I have no idea how something like this even goes public through a SPAC. It's really criminal in my mind that Wall Street, forget VinFast Auto, that Wall Street allows this to happen. And then, as I mentioned, what to watch. You have Apple product announcements on Tuesday afternoon. You have the CPI report on Wednesday, PPI on Thursday, and then next week you have the Fed rate decision. All right, guys, I'll see you on the next podcast.